Thank you to everyone for making the time this afternoon. This is actually the second Cardano R&D session. The first one we held last month on Beyond Hydra, and I think that was well received. This month we're focusing on Cardano Tokenomics. So we're, in terms of the format and the agenda, we'll follow a similar format to we did last month. We'll start just with a few remarks from myself before moving into an input-output research presentation on the tokenomic streams that are and the focus area included in our Cardano Vision proposal to the community this year. We've also got Ryan, who will be making a short proposal on SIP 50 and some of the recent work he's been doing in I think it's the one of the incentives working groups at Intersect. And then we've also got Manvir and Raul on the call from Cardano Foundation and from Fluid Tokens as well. So we'll then invite you to introduce yourselves, and we'll get into a roundtable discussion. Hopefully it will be pretty informative for everyone who's here. I'll just dive into just a few slides for those of you who are not yet familiar with input-output research. I hope that most of you are. But the session today is held in association with the Intersect Research Working Group. Input-output research set up that working group, which sits under the Intersect Product Committee, to facilitate discussions with the community more generally. Over the last sort of 7 or 8 years, input-output research has been pretty instrumental in the development of Cardano. Around 50 of our 200 research papers have been implemented in some form or other across the 5 areas, and we certainly intend to continue and improve on that going forward. We're a research group of up to about sort of 70 or 80 people if you include our architects and engineers. We're led by the input-output chief scientist, Agalos Kiasis. And we have about half of those are researchers, often affiliated with universities, and then the other half are sort of practitioners, as it were. And over that time, we've developed what we call an evidence-based methodology. It has high assurance. It provides systems that stand the test of time. So the research team will produce a research artifact. Quite often that's a research paper with supporting technology documentation. And we sort of equivalence that to sort of SRL2 or TRL2, technology readiness level 2. That's of a scale of 1 to 9. We then hand that over to an input-output technology validation team who then rapidly prototype, formally proof that, and develop specifications that are then handed over to an engineering team to implement in a real-world environment. Quite often research is dealing over a multi-year time frame, and as this work stream or project matures, it gets closer and closer to market. The Cardano Vision research proposal is a 5-year proposal. The work program for 2025 sits within that. So the Cardano Vision is structured into 3 layers, as it were. We've got the strategic research agenda, which outlines how IOG builds systems, and that stays pretty constant over the 5 years. It talks about methodology, resources, best practice, etc. We then have under that a sort of a vision and impact focus. So that consists of 9 focus areas, and underneath that 34 work streams. So that really talks about the body of works that we're proposing and the research areas that we believe warrant investigation over the next couple of years. And then from that stem individual work programs, work program 25 being the first, which then contain individual research work streams and technology validation work streams. I just want to re-emphasize that for those of you who are unfamiliar with how we work. So this outlines the 9 thematic focus areas. Number 3 is tokenomics, which we're going to be discussing today, but other focus areas that we believe warrant investigation and where we see the market going is obviously smart contracts and operating systems, the Ouroboros protocol, identity democracy, Hydra layer 2, partner chains in terms of interoperability, zero knowledge, and then post quantum. So it's quite a rich program and it's quite broad. But today we're focusing specifically on tokenomics, which, despite being relevant to most blockchains, is actually relatively under research. So we believe there's a lot of value to be gained from research in this area. So with that, I'll pause and I'll hand over to my colleague Paolo, who will sort of talk you through the tokenomics focus area in more detail.
Thanks, Fergie. Let me share my slides. I hope you can see them. Can you see my slide?
That's great.
Yep. Okay. So as Fergie said, this is about tokenomics. And before I go into the specific part of Cardano Vision, let me explain at a very high level what tokenomics means. It's essentially the monetary policy of the blockchain. So, for instance, the token supply, so how many tokens there are in the system, and what you can do with the tokens, and the impact of these design choices in the long term of how the system will operate. So, for example, one important thing is the price of the token, how it evolves. Here you see a plot of ADA, I think is the last year. It's not stable, but it's not bad either, in my opinion. And other things that you may want to look into is users adoption and decentralization in the long term again. So you don't want to see or predict how the things work in the next month, but let's say in 10 years from now. And that's very important. That's why tokenomics is among these 9 thematic focus areas under the umbrella name of Tokenomicon. And actually there are these 3 research streams, which is Tokenomics Design, reward sharing and transaction fees, and Stablecoins, which is specifically how to design a system on top of Cardano whose token price is ideally stable. Now, despite the fact that these 3 things have their own goals, and I will talk about them specifically at the end, what I would like you to keep in mind is that they are very much related to each other. So if you change one of them, it will affect the others. So in the rest of the talk, I will essentially present 2 things. One is where we stand in terms of research and knowledge. So what's the state of the art in the research and literature, and also what is the most recent result that we have achieved, and which allows us to have a better understanding of this area and also new ways to improve things, in my opinion. And then in the second part, I want to specifically discuss applications to Cardano for the future. And for example, how we can use the Cardano ecosystem, its heterogeneity, and the fact that the system is expanding to turn this into an economic growth value in having a long-term economic stability and resilience to shocks and so on. And so let me first start with a family of models. So what we know so far is the latest result. I will mostly focus on this paper, which is available on the website and is under review. It's a very general model, and it describes essentially how almost every proof of stake blockchain works. And the key point is that the token of the system is used generally in two different ways. So on one hand, you have the users that pay with the token to the system in order to get some service, typically your transaction being included in the chain. And on the other hand, you have the contributors or validators or SPOs in case of Cardano that get rewarded with this token. So in order to access the rewards, you need to have a certain number of tokens that you stake, you provide some work, and then you get extra new tokens as reward. And naturally, the important thing here is the price in dollars of this token. So you can imagine that if you are a user and you have to pay one token, you would like that this price is very low. But if you are a validator and you get rewarded with one token, you would like this token price is high because that's what covers your cost and gives you some revenue. And as you can imagine, things are not static, so they change over time. And that's what we want to study. So we want to study how the tension between these two parties will produce some equilibrium in the long term. And I don't want to describe the system in full detail, but the system is very rich in the sense that each of these components, like user and a validator, follows just its own interest, so it tries to maximize the profit or utility. And so the system cannot directly control the price. So the price comes from the market that is external to the system. And the system cannot buy tokens, for example, because it cannot act like a central bank. And so we would like to find ways to study what happens in the long term and maybe counteract some bad situations. And now, as I mentioned, there are different parts that are related to each other. So if you look at this diagram, you realize that transaction fees on the user side and reward sharing scheme play a role. And actually, the analysis says that these three things, so together with the prices, they are interdependent. And so one might ask, for instance, what happens to the price in the long term if we can do something about it? And I want to discuss this, of course, because it's a big problem in blockchains to have stable prices. I'm not claiming that we solve this question, but it's a good point to see what is the difficulty and what needs to be done. So why is not so trivial to have a system with stable price in practice? If you look at this model, you see that basically those that buy the tokens are the users. So that's the demand on the market. And those that sell the tokens on the market are probably the validators who get this token as rewards, and they need to sell it because they need to cover some cost. And so as long as the demand and the supply stays the same, you can imagine that the price will stay stable. And so why is price changing? Because it's possible that at some point there is some external shock, let's say, like rumor that maybe a government is about to pass a more restrictive regulation about cryptocurrencies or the opposite. And so the users will perceive the system in a different way. So maybe the system is less attractive for a certain period of time, so the demand goes down. And now the question is, how can I adapt to this by somehow convincing the validators maybe to sell less tokens to the market, if that is possible at all? So that's one of the issues that needs to be understood and solved. And the research that we've done recently actually provide a number of insights. So first of all, it's possible to control the prices in some situations in a new way, which is instead of doing buybacks or other classical things, it's possible to act on the rewards on the validator side in a non-intuitive way, meaning that if you increase the rewards for validators, this will make more convenient to stake tokens instead of selling to the market. And so that's a way to control the prices. And in some sense, it's the opposite of what common sense would say. So I think this is a good insight that could be used. And now, if you're thinking about, okay, let's just double the rewards on Cardano, be careful, because the paper also says that this needs some care because in some cases this could create other problems. And so the paper gives some analysis and says what in general can affect the prices and how you can keep other important features like decentralization, price stability, and viability, meaning everybody is engaged in the system, so it's important for security as well. And so this is like the end of the theory part and also where we stand in terms of knowledge. And now I would like to briefly present the second part, which is the Cardano Vision and what we plan to do with the research. So as I said, tokenomics is composed by these three main research streams. The first one is, in some sense, the closest that you have seen to this model, but specifically for Cardano, we want to understand how important parameters like treasury, token supply, and how to use the reserve affect the long-term value of the token and the general health of the ecosystem. Reward sharing and transaction fees are an important part, but they also have their own goals. Like we have existing schemes, and we would like to understand how incentives and game theoretic analysis could possibly refine these schemes. And finally, stablecoins. So stablecoins are, as I said, they are quite difficult to implement. So you probably need a number of machinery, and we expect to have some trade-offs between decentralization, price stability, and collateral and capital efficiency. And these type of models that provide a model to understand the evolution of the price in the future are particularly interesting for stablecoins. So to design a robust system. And now you might, of course, consider what is missing in the state-of-the-art models and what needs to be done to achieve these goals. So there are three important ingredients that needs to be incorporated into a model. One is this economic role of validators, or specifically to Cardano SPOs. In some sense, this is the economy of proof-of-stake systems. So this part must be in the model. It's a novel part, in our opinion, and it's a very important part that cannot be disregarded. The second thing is that the system is evolving and hopefully expanding. And so in case of Cardano, for instance, you have a very much diverse ecosystem. You have recently heard probably about the partner chain framework. That's a way to, in some sense, expand the ecosystem, but also enhance the economic capabilities of Cardano. And so these things, in order to understand how to exploit them, must be modeled in a precise way. And of course, we want to understand prices, because this is in some sense the heart of the tokenomics and whether the design works well. And so the family of models that I presented, the one that I presented is in some sense the most advanced in a certain family, considers only the first and the third, but doesn't incorporate system growth. And there are other models that incorporate system growth, but they don't talk about these validators or proof of stake economy. So what we need to do and what we are doing is to first have an even more complicated model that puts together these two. So it has all these three important features, and into the model extrapolate and analyze precisely how the reserve, the ecosystem, and the heterogeneity affects the tokenomics design, and if you change one parameter, how everything else is affected. So as Fergie mentioned, there is a great potential in this research. The fact that it is underdeveloped is simply a great opportunity to amplify the technological enhancement of Cardano, also in terms of economics health. And with that, I think I will conclude my presentation. I'm looking forward for discussion.
Thanks, Paolo. Ryan, I'll hand it over to you, and then we'll move into some discussions afterwards, if that works.
Sounds good. Thank you, Paolo. Alrighty, are you guys able to see my slides fine? Nice. Okay, so I'm Ryan. I go by Cerkoryn on the internet. I'm a Cardano community member. There's a group of us that earlier on this year got together to put together a working group to work on incentives. And this 50 proposal of ours is one of our major proposals we've been putting together. So first off, to define kind of what we're looking at here, pledge A0K. You've probably heard these parameters thrown around. Pledge is basically the ADA that a stake pool puts in their own pool. And it's designed to increase rewards and have them represent skin in the game. So A0 is the pledge influence factor. It affects how much rewards you get by having increased pledge. And raising A0 will reduce rewards for low pledge pools more than high pledge pools. And then finally, K is a parameter that determines the saturation cap for all pools, currently set to about 500, which puts a saturation cap about 75 million ADA. And if you have a stake amount over that saturation cap, that additional stake doesn't earn for rewards. A common thing that you might hear Kay talk about is it's called like target number of stake pools. And I think that there's a better way to visualize that is as a Simpsons index, which is basically a measure of diversity, usually used in ecology among species. And how we use it here is if you select 2 ADA randomly out of all staked ADA, the chances of it being from the same stake pool are about 1 in 481. So if you measure it that way, we've actually converged pretty close to our K target. Purposes of pledge, right? So like the main idea for pledge is to discourage Sybil attacks. You have to impose a cost to creating a bunch of fake pools to gain undue influence. And it's supposed to be a limiting factor when it comes to opening multiple pools, right? You would have to spread your pledge thinly around to operate multiple pools, which reduces rewards for you and your delegators. It also represents it aligns incentives. You know, they have their own skin in the game, so they want the value of ADA to go up, so they're not going to be incentivized to attack that work, and it will build trust with delegators. And a couple of warnings that were called out early in 2020 from a blog post by IOG. 2 things to be wary of is pool splitters, people who split pools, and high leverage. And this is not to shame people who run multiple pools or people who don't have very much pledge. It's just to draw attention to the combination of the 2 things can be an attack vector on the network for people that have low pledge and multiple pools. Current state of pledge on Cardano. So we have about 473 pools that don't have any pledge, representing 2.74 billion ADA. And if you count up the amount of stake that those pools control, if you just count the pledge, it's only 54 million ADA to perform a 51% attack. So we really want to see if we can raise this number up to make it more secure. And then having the minimal pledge requirements we have right now enable operators to spin up many pools, which dilutes operator diversity and undermines decentralization. So here's kind of a representation of that, of the distribution. So if you see, we're quite bottom heavy in this regard. We've got 15 pools above 40 million ADA in pledge. That represents 1.4 billion ADA. But we also have 473 pools with 0 pledge, representing 2.74 billion ADA. So we really want to enhance this and see if we can get it to be a better distribution. We already have one of the best distributions in the industry, but we could definitely make it better. So we borrowed the open source tool from the University of Edinburgh Blockchain Technology Lab to kind of research how we would improve this. We ran some simulations with different numbers for A0 and K, and we found the general rule of thumb: raising K increases decentralization. But there were 2 exceptions to this in the simulator, and the key takeaway from our hypothesis of what this might be is one of those circumstances is when pledge is too important, and the other one is when pledge is not important enough. And we circled those there in the graphic. So you might be thinking, okay, if A0 is designed as the pledge influence factor, why can't we just increase A0 to make pledge more important? And And so we can increase pledge, but the problem is that it would come with a painful trade-off of lowering rewards for the whole network, and it would disproportionately lower rewards for the lower end of the network that has low pledge. And that would be quite a difficult pill to swallow, we think, for most of the community. And it would expand this pledge boosting zone you see here in green. But it would still be kind of out of reach for most people because it starts around like 40, 50 million ADA in pledge, and most pools aren't really near that amount. So we decided to go back and we looked at SIP 50, which was an old proposal from several years ago, and we kind of made a modern take on it. And what it does basically is it adds this under-pledged penalty zone kind of to the other end of the pool, where if you have too much stake and not enough pledge, then you need to add pledge to be able to justify the stake that you have. Any stake over that pledge leverage limit will be just like oversaturated, just as if you're above the K saturation cap. And we like this because it specifically targets the low pledge pools, and it allows you to enhance pledge without the side effect of raising K, which kind of shifts stake among all pools regardless of pledge you have. And real quick, I won't delve too deep into this, but the math and how it works. This is the Cardano rewards formula, and implementing the change is as simple as just adding this one parameter L times P in the rewards formula. And so if we zoom in on the far left side of that graph we had over there, what you would see is something like this, whereas the solid red line is the saturation cap we have now that's determined by K, and the dotted red line is the new one, which is L times P, using pledge leverage, the new parameter. And basically, the value of L, which in this picture, just for demonstration, is set to 250, determines the slope of that line, right? So the community would have to decide on how much pledge is needed to justify certain amounts of stake. And you can see that some pools would be affected, and you need to have I think 300,000 ADA in pledge to be able to fully saturate a pool in this instance. And so we ran some simulations by modifying the very simple modification to the University of Edinburgh rewards simulation sharing engine. And we found that the Nakamoto coefficient is mostly the same, maybe slightly better, with the addition of our SIP 50, and the total pledge of the network is increased, which means that the primary benefit here is additional Sybil protection. And this, of course, the secondary benefit is increased decentralization. And that's it. That's all I have for my presentation.
Great, Brian. Thank you very much for that, and I'm sure we'll discuss it in the roundtable. So Manvir, could I come over to you, and could you introduce yourself and talk a bit about some of the work you're doing in tokenomics at the Cardano Foundation?
Yes, thank you very much. So hi everyone, my name is Manvir Schneider. I'm a senior research scientist at Cardano Foundation. My work focuses on tokenomics, incentive design, and voting mechanisms. I have a background in game theory with a PhD from ETH Zurich. And a fun fact, my first algorithmic game theory class I took was taught by Paolo. So he's my teacher. And when we talk about tokenomics, I think it's important to go beyond just supply curves or utility narratives. And as Paolo actually mentioned, tokenomics is about designing the rules of the game, who is being rewarded, how are decisions made, and what are the trade-offs. And if we get these mechanics right, we can build a chain that's not only decentralized and secure, but also economically sustainable in the long term. I focused on two areas. One is how can we improve reward and fee mechanisms? And second, how can we model governance influence more fairly, meaning that using power indices, which I can explain later, to move beyond pure stake-weighted voting. And I believe Cardano has a unique opportunity to lead in tokenomics research. And yeah, looking forward to discussion.
Great, thank you. And Raul, over to you.
Hi, everyone. Well, first of all, thanks Paolo and Ryan for your presentation. I learned something new today. And I am the CTO of Fluid Tokens. So I am a developer in a DeFi DApp on Cardano. And my involvement with tokenomics usually is more into looking for new utilities in the DApp itself for the tokens, and also as a user of Cardano, exploring and studying the design of the new tokenomics that, as you know, it's I think it's an evolution, because you see every time different effort, different tries, and I think that we all can learn from that. Great,
thank you. So Manvir, I'm going to come back to you for the sort of to kick us off on the round table. So I guess one of the questions that came out of the presentation is what defines a healthy token economy. Could you talk a bit about what indicators one might use for that, and how Cardano is faring in your opinion? You're on mute.
Yeah, so in my opinion, a healthy Cardano token economy would sustain decentralized participation, would align stakeholder incentives, and support meaningful utility across applications. And one key indicator is, I think, growing on-chain utility. And additionally, I would say predictability of protocol rewards and costs are also crucial to help participants, which are the users and the SPOs, to make confident long-term decisions. And yeah, from a game theory perspective, these predictable rules enable the participants to better understand the game they are playing, and which allows them to make to form stable strategies and make rational choices over time, which contribute to the overall health of the network.
Sure. And Raul, you're probably looking at this more from a practitioner's side or a builder's side. Do you share some of those thoughts, or do you see things perhaps a bit differently from Fluid's perspective?
No, absolutely. I think that I agree with Manvir. Usually, when projects usually design a tokenomics, what they are considering is allocation, vesting, emission, and liquidity in the markets. And but I think that one of the most important parts that nobody sometimes talk about, and I think that it's one of the positive things regarding Cardano in specific, is the transparency. We saw in the presentation of Paolo that there are many actors involved that can be validators and can be users. And if both parties can have the transparency of what are the rewards or what are the current transactions involved, everyone can be involved in the game and base their strategy according to this. If transparency is not there, this means that validators or users are actually playing against each other with some knowledge that nobody has, and this is something that should be not possible in a transparent blockchain. And I think that this is a good example that Cardano has done.
Okay, so we're strong in transparency. That's good. Manvir, coming back to you and perhaps reflecting a bit on Ryan's presentation, he obviously has raised some very valid points around the supply side, as it were, and perhaps the security of that. Do you think there's adjustments warranted here, or through your work, have you analyzed reward feeds and pledge mechanics, and do you feel that the current framework is suitable? I guess is what I want to ask.
Yeah. So good question. So I think rewards, fees, and pledge mechanics are we need to tune them to balance decentralization and sustainability, security. And so currently, giving higher rewards to pools with higher pledge and having this diminishing returns for very large pools, we're essentially designing the rules of the game to make it less appealing for a few large, powerful stakeholders to dominate. And hence, we're encouraging a few smaller, like a broader participation. And yeah, basically, this is kind of a mechanism design approach where we want to adjust the incentives, which are the rewards and the fees, to influence the strategies of the SPOs and delegators towards a desired outcome, which is decentralization, and adjusting the fee structures to have predictable operators income, and favoring delegation to undersaturated pools will further help to achieve the goals. And yeah, coming to the particular the K and A0, it needs a lot of research, I feel. I don't think there is a right or wrong, what is the right parameters, but we need to, there's always some trade-off, and we just need to find what fits best for Cardano.
Sure. And Raul, how do you think, at Fluid, how do you think about designing sort of rewards and fees and I guess, the broader sort of role of pledge mechanics in your business?
No, absolutely. I think that, well, first of all, validators in general should not live just from the rewards. Like in an ideal blockchain, you would like to have that much fees generated that are covering the cost of the validators and are a good incentive for the validators to run. But, and this is actually the challenge for us as developers, as builders, because we need to build very good and the DApps that people actually want. Because if we build this kind of application, this means that the transactions of Cardano are increasing, and therefore the fees are increasing, and the model works because validators are incentivized to keep up in the game.
Sure. And Paolo, I know some of the tokenomics design that IOR is proposing is focused on smaller pools and some supporting sort of smaller pools who perhaps are more challenged economically. Can that align, or does that align with some of the pledge mechanics that's being discussed here, or how would you sort of see that, as it were?
I mean, so first of all, in my opinion, this Cardano is already doing great, because if you compare the amount of tokens that are staked on Cardano with the amount of tokens that is staked, for instance, on Ethereum, this is much larger. And that's not by chance. It's because there is a delegation, and there is a easy way to participate in staking. Let's say indirectly, I delegate. I don't have to run a node. And so, of course, if it goes to the extreme where there's more pledge, I can control a lot of things. That's bad. In terms of the model with the pledge, in terms of tokenomics, is more involved. I think perhaps one aspect is if you change it, well, the arguments in favor and against, of course. And so in favor, it would be that I keep or I attain a better decentralization and more secure, let's say, because the Nakamoto coefficient will go up. But in principle, there might be other unexpected effects, like I ask an SPO to put more ADA. And then maybe to compensate, I will give less rewards to the people that delegate to me. And maybe as a reaction, there will be less stake in total. And so all I want to say is it's probably a good idea, but tokenomics could help in find the right spot where this parameter works well and doesn't go in the opposite direction. I don't know if I answer your question or I went out of.
Yeah. Ryan, do you have any reflections on Paolo's remarks or Manvir and Raul's?
No, I think he has a great point. Finding the initial value of like if we make the changes, like what are we going to set L to? We set to a really low number, really high number. You want to make sure that you're not pushing out small pools. You're not being overly penalizing honest actors. And also we have the the situation where we have we want to have a healthy stake distribution all the way from smallest pools to the biggest pools. And it's a tough balancing act, because on one hand you don't want a handful of large pools dominating the entire network, but then on the other hand you also don't want hundreds or potentially thousands of tiny civil pools dominating the network either. And now that we have on-chain governance, we can adjust these parameters on the go. And I think it would be healthy to be constantly on the ball with making adjustments and seeing how changes things, and just constantly having a cycle where we're making changes, trying to improve the total stake distribution of the whole network. I think that would be like kind of what we should strive to do.
Okay, great. And so if we sort of broaden this discussion out a bit more to sort of governance vulnerabilities more generally, you know, token-based incentive mechanisms, you know, can, you know, if implemented correctly, can reduce low voter turnout. It can mitigate against over-representation or collusion. What considerations in a more general framework do you think Cardano needs to consider when it comes to sort of governance more generally? I'll go to you, Manvir, if I may. I know this is an area of your research.
Yes. So as I mentioned earlier, I think we need to move beyond stake-weighted voting and align actual voting power with stake in a more principled way. So there is actually a concept in voting theory called Banzhaf index by a mathematician called Banzhaf, and it essentially tells you how powerful voters are in terms of deciding outcomes. And how this Banzhaf index is calculated, it's very easy. You just count all possible voter coalitions where certain player is pivotal, and then average over the total number of coalitions. And currently we are working on a research project exploring how voters' Banzhaf power can match their relative stake. And this will, I mean, the example I want to give is that if there is a stakeholder having 51% of all tokens, of all stake, then in a simple majority voting scenario, he's the dictator because he has the majority, he decides. But so the Banzhaf power would be 100% for this voter. And we want to achieve a voting mechanism where the Banzhaf power is actually equal to the relative stake, meaning that the power of the voter should be 51% if he has 51% of stake, meaning that out of 100 proposals, probably 51 proposals he would win, but 49 he would still lose. He would not be the dictator for all 100. Kind of in a simplified way, you could think of this like this. And with such a voting mechanism, we could prevent large holders from having over-proportional control. And then combining this with the incentive for participation and transparent delegation, I think we can build a really cool working governance system that's like fair and resistant to attacks.
Okay, and Ryan, I'm going to ask you to talk a bit more about the various working groups at Intersect when it comes to governance. So would you just be able to talk a bit about where your working group sits, and is it affiliated to other working groups, or does it sit under committees, and perhaps some of the other discussions around governance that have been going on in those quorums, as it were?
Yes, I should actually mention our working group is not actually affiliated with Intersect. We're just a group of community members that we've been talking about this stuff for probably years now for most of us. And then just a group of us got together and said, hey, why don't we just put our heads together and start putting up proposals and just start presenting them to the various committees, SIP editors, technical steering committee, parameters committee. And that's kind of where we are. You know, we rewrote the SIP 50 proposal. We have a couple other proposals in progress right now. We're hoping to have in the future. But as far as Intersect goes specifically, I am an Intersect member, but I haven't participated a ton in the different working groups there. So I don't know how much I can speak to that, but yeah.
Okay, thanks for that clarification. And in terms of sort of governance, are there other issues that have sort of come out of your discussions within your own working group that's independent to Intersect?
Yeah, our main focus has been specifically on incentives. We do talk about governance a bit, specifically about things like trying to increase the MAV, the minimum attack vector of for governance specifically, right? Like how many DReps does it take to pass, you know, the 50% threshold, the 67% threshold. We want to encourage a healthy distribution of DReps and voting power, right? And right now we're at a point where the DRep participation is still much lower than it could be. So we want to try and get as many wallets as possible and as much ADA as possible to either delegate to themselves as a DRep or delegate to somebody else. So it can increase those participation numbers. And ideally, they would also delegate to somebody who's not in this select the MAV, the top 20 or 30 DRep so that we can enhance the distribution and the decentralization of governance specifically.
Okay, great. And we've got a question here about industry adoption and integration. It's from Sean, particularly in regards to financial services and insurance. So I guess this is an open question to anyone, but does anyone have any views or been doing any work? Obviously governance is a key part of that and almost a prerequisite, but has anyone sort of been doing any work around how we can engage more succinctly with DeFi or sort of the financial services industry? Raul, do you work very independent? I'm going to come to you on stable coins in a second, but do you work quite independently, I guess, to sort of other financial sort of businesses?
No, well, like at Fluid, usually we have some relationship with institution and partners, and as you were saying, one of the hardest thing is to get adoption. And when we say adoption, it's not just among users, because let's think about why Ethereum is currently most used. Most of I saw a tweet this week, and it said that most of people are not using Ethereum because they are using the assets, so the underlying asset, Ethereum itself. They are using it because they are storing stable coins there. So they use the chain as store for the stable coins. And why USDT and USDC, for instance, are the most used stable coins? Because they have adoption among exchanges, among institutional. So if we want to increase and have more participation among this kind of stakeholders, we need more adoption of our assets, and in this particular case, stable coins.
Okay, and continuing on stable coins. So do you want to talk a bit about the business that you have at Fluid, how you've approached that, and I guess how you consider sort of trade-offs, some of the trade-offs we've mentioned, whether that's decentralization, stability, or sort of capital efficiency?
No, absolutely. So first of all, when we started the Fluid, there were no stable coins on Cardano, so at least we are in a better position right now. Most of the users are asking, and most of the partners even are asking to have wider, deeper liquidity for stable coins in order that they are able to run actually business on top of Cardano. And but there are some regulation issues also involved, because if you see the US government and the path they are going, there is let's say a more open view for stable coins, and a lot of companies right now want to issue one. But if you go to Europe instead, there is a more strict regulation that they want to be able to check and control everything. So the question is, how do you want to design a stable coin on Cardano? Do you want to be more US friendly? Do you want to be more Europe one? And it's not an hard, it's a very difficult answer. So I'm not here to give it, but I'm here just to let us think.
Good. And Paolo's, one of the research streams that Input Output is proposing is on stable coins. Do you want to talk? I know you presented on this, but do you want to talk a bit more in detail in some of the sort of areas that you're intend to investigate, and some of the research threads within that stream?
Yeah. So essentially, what happens is that first, there are some algorithmic, let's say pure algorithmic techniques that can help, similar to what I presented. But what we know is that they cannot solve practical problems because you cannot predict future shocks, let's say. And so you would need some form of reserve or collateral. And what you need to know is how much you invest in that, and also what type of collateral you want to have. So some implementation use different resources, because this is very similar to portfolio optimization, where if one goes down, the other one is stable. On average, things still work. And the other aspect is that maybe should be considered is something related to interoperability. So in economics, what is also very important is a network effect. And so if there are a lot of people that use a certain system or a certain stablecoin, the trust in that system increases just because I know that I can interact with you more easily, or if I want to sell my asset, I will find someone who wants to buy it. And so a central part is how to increase the user base, especially at lunchtime. So these are the key questions that we're trying to formalize in macroeconomics and game theoretic setting to have some guarantees. And also, I want to say sometimes, or very often from research, you get unexpected answers. So you get insights that are very helpful that you would not expect if you would just go by intuition or by simulation. So more or less, this is what we're trying to pursue.
Okay. And Manvir, from your work, do you have anything to add to that discussion on stablecoins?
No, I agree with what Paolo said. Maybe it's a different point, but nowadays with all this AI agent being like a bigger and bigger topic, also there are like new open protocols proposed, like X402, maybe you've heard of it. So if an AI agent wants to request some data, which is behind the paywall, he needs to have a subscription. But with X402, you can just pay per use. And this mostly, the use cases I've seen now, they're using stablecoins. So your AI agent would pay in stablecoins for some services. And so I see with all the big wave with AI, we should be like ready with stablecoins. So AI agents can actually make use of them.
Okay, great. I've got a few questions here, which I'm going to turn to. So I think this one is for you, Ryan. It's from Alejandro. So he says, are there contingency plans if the new formula leads to unexpected centralized effects? So have you sort of done any sort of work on that in regard to SIP 50?
In regards to SIP 50 itself, I don't know. I don't know like what we could like look what kind of centralizing effect that might have. We could one option to look at is just have L at a very high initial value. So if you have it like 1,000 or so, there's if you remember that dotted line, the slope of that dotted line would be very vertical, and there would be very few pools at all that are affected. So you could, one option would be to start small and move bigger, of course, and just observe the effects to make sure that's having the effect that you want. And then of course the other effect would be to do big changes all at once to minimize the amount of governance fatigue, having to readjust proposals, and cause delegators to have to constantly move as well. So it is kind of a trade-off. As far as contingencies go, I don't know that it would necessarily cause a whole bunch of centralizing effect, but that's definitely something we can look into.
Sure. It might actually be my misinterpretation. I think that might even be for Paolo, this one. So,
okay.
But good to hear your reply. But if when you're exploring this, what you presented, I'm going to say 1, 2, and 3, and you see that centralization is a byproduct of some of the research, Paolo, is that how do you think about that, and how would you consider or sort of plan for that, as it were, as you progress with your research?
There's also let's say a feedback loop in terms of decentralization, because you can reasonably consider that users like more decentralized systems. And so if you start improving decentralization, you will also have more resources for your system, which then helps further to drive the system to better decentralization. Because if you have, for instance, more transaction fees, you have more margin to counter-react certain fluctuations. And that allows you to keep a higher decentralization and a higher stake, and so on. So one way to think about it is if my system is already in a good equilibrium, I can smoothly move to a better one. The other way would be to, for instance, certain models incorporate how much decentralization translates into benefits for a user or trust for the system. And then you could say, if I'm able to increase the number of validators from 1,000 to 3,000, how much value I will bring in terms of fees. And then you can decide whether this is feasible or not. Because essentially what you study is the feasibility of certain equilibria, which you cannot directly control, but you can predict more or less where the system will rest. So it's similar to what Ryan said. Should we change the things gradually and let the system go somewhere? Or is it possible to change the things more rapidly and have the actors reacting as we want, or even understanding that they should react in a certain way? So, for instance, when you said before, if they follow a certain change in incentives and economics, one important factor is the psychological factor. So how I perceive and how much I trust the rules that you propose to me. So if I trust that it's convenient for me to do certain things, I will do it. But if I don't understand the new rules because it's too complicated, or if I'm not able to understand why it's good for me, maybe I try to do something different. So in that sense, economics is even more challenging than security. Because if the system is secure and I don't believe that it's secure, I can try to break the system and it will just fail. If the system is economically valuable and I don't believe it, I will simply try to act against the system, and that will be bad for me and for the system. So,
okay, great, thank you. We're going to run a few minutes over, so I hope everyone can sort of stay online for another sort of 10 minutes or so. But I want to move the conversation on to growth. I think there's a few comments here that we've been quite focused on security. So Imran sort of makes the point that and I guess DApps and bringing developers into the ecosystem is one way of doing that. So has anyone, this is an open question, has anyone got any thoughts of how one can optimize the tokenomics of the L1 to help DApp developers and make it more attractive to use or deploy versus just staking? Yeah, Ryan, over to you.
Yeah, I actually love this question, and this kind of overlaps with Miguel's question too. Is because I think Cardano has an ace up its sleeve compared to the rest of the competition, right? We have fully liquid, non-custodial staking. So I think that the question is not to be, should you use your ADA or should you stake it? It should be both, right? So I think we should be spending a lot of time and effort trying to design DApps that allow us to keep our ADA stakes and participating in governance power while we're using it in a DeFi economy, right? And so that could be in the form of, I place a limit order and I leave that limit order thinking the price of something is going to drop in like a year from now. And I would like to leave it for that whole year, accruing staking rewards, participating in governance without having it, removed from my staking key, or just other kinds of DApps that allow me to keep the benefits of both without having to give up one or the other. I think really that's the important thing that we have in our favor that we could use to really drive growth in the DeFi economy.
Sure, and Raul, being a practitioner, do you want to could you talk a bit about some of your growth strategies, or perhaps where you would want more support or more enablement from the protocol?
No, absolutely. I think that some can be split in how to onboard more users or how to onboard more developers. For the user side, I fully agree with Ryan. I think that on Cardano we have this unique thing that we can have our ADA staked on and giving us rewards, but still being able to participate in DApps. And this is currently what we are experimenting. And currently we have a testnet DApp running that allows users to provide liquidity in ADA, still get ADA rewards and governance participation power from that. And if someone borrows from that ADA, only at that moment they lose control over it, but this means that they are getting enough yield of what they wanted. So that's a very good use case. And if you want to onboard more developers instead, you have to showcase how much possibilities are still available on Cardano. We don't have 1,000 or 10,000 of DApps, so there is still a market there looking for DApps to be used on Cardano. And at the same time, there are opportunities like Project Catalyst, for instance, that could help to grow and to onboard more developers.
And Manvir, how do you think about growth in the context of your research? Does it run through it, and it's sort of complementary in some sense, or do you have to sort of give or take on governance or some other factors to enable growth?
I mean, with our research, essentially what we want to achieve is to make the blockchain more attractive, right? And the more attractive blockchain will be, the more users we could expect. And our ultimate goal is just to fill the blocks. And yeah, this is what we are hoping with our research.
Okay, and Paolo, any sort of additional remarks from you?
Yeah, I mean, along a similar direction, I personally like a lot the partner chain framework as a way to expand Cardano, because it's a way to restake with essentially no additional cost. So basically, you get opportunities of extra rewards and make essentially more attractive staking for Cardano, and at the same time, you participate in new projects. So you expand the ecosystem and improve the security at the same time.
Sure.
And again, this is a feature of Cardano because it's also related to the fact, Cardano doesn't implement slashing. And so you don't have the problem that if I restake my ADA and I get slashed, then it's a problem for the other application. So everything is easier to implement.
Sure. And when one looks at growth and partner chains, as well as builders and DApp developers, are the tokenomics very different if one's looking at launching, supporting new chains or supporting the applications that run on these new chains? Is there a big difference in those considerations?
In some sense, or in some setting, surprisingly, it's simpler. What I mean is, when you start supporting a new chain, you probably get rewarded with a different token while you're staking ADA. So you have two tokens. And this has the effect of decoupling the use that you do with these two tokens. And basically, you take the best of the two. So sometimes the problem that you have is that the token needs to accommodate two different things. And now you have ADA that is used for staking, and then you have the new token that you get as rewards that goes to the market. And so especially at the beginning, when there are fluctuations for the new system, because it's very fragile, this is not directly linked to ADA. And so for a number of reasons, it makes things easier to develop, also economically.
Okay, great. So I'm going to just two quick fire questions, and then I'm going to ask you all to sort of conclude with a sort of summary statement of where you think Cardano is going over a 5-year timeline. What do we need to do to be success and to reinforce the great work that's already been done? But before I do, I've just got a question from someone here about what tools do you use for modeling and simulation? Can someone, anyone, Manvir or Paolo or Ryan, to talk about some of the tools that you use, just very quickly?
Should I start?
Yeah, go for it, Paolo.
Yeah, so there are two things that game theoretic tools that one uses. One is analytical tools. So you set up the condition where you expect the system to rest because the participants don't have a way to improve. And then you see all the possible scenarios that could possibly happen. I mean, you get some range of how good and bad things could go. So basically, these are analytical tools that tells you how the system reacts when you change some parameters. In terms of simulation, what you could do is to actually simulate the dynamics of the system. And so see every single change before you get to this equilibrium, and see also how long it takes, because that's another important aspect. I could make a prediction that the system will reach a stable price, but if it does in 20 years, then it's completely useless. So these are the type of things that we do in a certain type of research to validate the analysis of these complex systems. Generally, we produce theorems that state under this and that circumstances, this is what you expect to have.
Okay, great. So I'm probably just going to leave it there, actually. So in terms of some closing remarks, Raul, I guess, what would you like to see coming through from Cardano over the next couple of years, and what do you think is achievable from Cardano, from a tokenomics perspective?
For who is the question? Sorry, I missed that.
For yourself. So just, I guess, some concluding remarks on, looking forward. What would you like to see? Where would you like us to be in 5 years' time, and what do we need to do to get there?
Yes, I think that in Cardano right now we are experiencing what is fully on-chain governance, and we are in the early days of it. However, we are not anymore an early blockchain. So what I would like to see in the next 5 years is a faster way of taking decisions for the governance, and also a new way of building DApps that are able to connect with this governance tooling and DApps together with DeFi. In this way, we are not going just to be a DeFi blockchain, but we are also going to be a point of reference for any other blockchain that is going to have their own governance.
Okay. And Ryan, your views on what's achievable in the next 5 years?
Yeah, I would love to see a lot more DApps coming out that use Hydra, specifically for things like what's been in the news lately, like tokenizing stocks on chain. Like, I would love to see something like the New York Stock Exchange or the NASDAQ be traded in Hydra heads. That would be super cool. And it would be, we could charge, we could allow super capital efficient, zero fee trading using order book models instead of, the industry standard automated market maker. And then, like I said earlier, more DApps that allow us to have our cake and eat it too when it comes to staking and voting power, in addition to using our DeFi ecosystem. So I would like to see a lot of those things.
Great. Manvir?
Yeah, I think one different aspect I want to highlight is we all know reserves are being depleted, and we envision that we come up with a good mechanism or changes such that Cardano is self-sustainable in the near future, and such that transaction fees alone incentivize the SPOs to be an SPO.
Great. And Paolo, what would be great to uncover in your research? Is the holy trinity of combining 3, 2, and 1 effectively?
Yeah, well, also probably also the interoperability of Cardano in terms of other currencies in both directions, like contributing to other projects or having users from other currencies being able to interact with Cardano and contribute directly to Cardano. I think this will open up more tokenomics enhancements.
Great. So thank you, Raul, Ryan, Manvir, and Paolo for your time today, and thank you to everyone who's joined us. This was the second Cardano R&D session. It's got a monthly cadence on the first Tuesday of each month. We tackle a different subject each month, so we'll announce what we're doing for August in the next few days, bearing in mind it's Rare Evo as well. But this format is still quite new, and obviously the Voltaire era is still quite new. So we're learning as we go. So we'll be sharing the slides, we'll be writing this up and putting the video online. But Please get in touch if you have any comments or feedback or reflections. The ambition here is to bridge the gap between research and development and provide a quorum for strategic collaboration. So I hope we've taken some steps towards that today, and you've all come away with a couple of points that you weren't aware of before. So thanks again for your time, and yeah, look forward to seeing you next month.